2016 had a lot of news. I mean, we in the media, we were very happy because we got a headline on a daily basis, one way or the other, from the startup ecosystem in the country. But a lot of talk about, purse strings being tightened, caution when it comes to investors. But the net venture capital investments for the year 2016 were the second highest ever, and the highest being the year 2015. How do you see this transition from 2015, when there was a lot of euphoria, to 2016, where there's a lot of caution, but still managed to notching up numbers, pretty good? And how do you see 2017 shaping up on the back of the kind of 2015 and 2016 we've had?
The venture capital deal volume in 2016 was down about 60% from 2015. Value I haven't looked at. You may be right, because some large funding rounds in some of the unicorns. And again, I think the number you're referring to is PE. PE was about the same. VC was down about 60-70%. But I think the question still remains about the manic depressive behavior, right? So the reality is, all of us in the ecosystem get super excited when things are going great. Then we get very depressed when they are not. But if you ask me, and I keep repeating this, that's the beauty of the startup investing ecosystem. And I would say 2017 is going to be one of the more steady state years, which the steady state in venture capital happens maybe 1 in 10 years. So it's going to be one of the more normal years. And then my guess is 2018 people are going to get carried away again.
Ask Bala the same question as well. How do you, in your view, how do you see 2017 shaping up? Do you see investors loosening their purse strings this year as compared to last year?
I do think that the way this industry operates is windows of a 2-year cycle. So that's the reason why I completely agree with Avnish. I also see that you also have to play in different sectors differently. So last year we did 3 SaaS deals and 1 late-stage consumer deal. So that's the way we said that is the best way to participate. And I think that kind of discerning investing is there in the country today. While there is a large dollars flocking to some companies, there are also a lot of VCs who are farming out much more. There is not so much of a concentration. You're seeing new bets getting good money. So I see that trend coming up, where you see convergence plays like health and consumer or health and technology getting a lot more funding in the coming years.
Jas, you just in March 2016 raised a strong $9 million round of Series B funding, if I'm not mistaken. What was it like to raise $9 million in the March of 2016?
It was tough. Clearly, when we raised the money, we were probably in that month, I would say, for that amount, which was $10 million, was probably the only one in that month. And by the way, we announced it a full year later. We took a full year to announce it because we just didn't feel appropriate to...
What's the worst question you were asked when you were in any one of your pitches?
Worst question asked?
Worst question.
Well, one of them could be sitting on the panel right now, but... No, but a lot of things. I think there was such a large focus on GMV at the time that we were raising money, and as a platform we do a fair bit of GMV, but our focus is always on SaaS revenue. We charge $400 per customer per year from the long tail in India. We do about a fair amount of revenue per month, and the question was always make your GMV higher than your SaaS revenue, and that was a very hard question for us to answer, because we knew that we are going after this local large tail, a very, very long tail, and now we have 50 offices and 600 people. And that shows the scale we had aspired to be on, but the focus was, hey, no, reduce that and go focus on something else, which we were not comfortable doing.
Manav, if I were to ask you, what was 2016 like?
2016 was interesting. It was good for us as a lawyer, especially in the geography where we are based, which is Bangalore, which is a hotspot for a lot of innovation as well as early stage investments. I think the transaction speed used to be incredibly fast. People are, I wouldn't say being more cautious, but I'd say being more, I wouldn't say realistic as well, but they're being more focused on what they are talking to each other on, what areas they believe they need to be synergistic towards, what the entrepreneurs, some of them have come out of earlier ventures as well. So what have been some of their learnings from there, and how do they adapt it into the new investment?
Right. Even as we discuss all these numbers, 75% of all that goes on in the Indian startup ecosystem is about startups with the word tech attached to them. that's why I'm going to ask my next question to Jinesh. How, as a startup, what was it like? For startups, what was it like, 2016 for a non-tech startup? And more importantly, what does 2017 hold in store for them? Do you see better times ahead for them?
Look, I can talk about what we did at Omnivore, right? We are agriculture fund, focused fund, but technology plays a significant barriers in that. We invest mostly in companies which are tech, there's a tech barrier, but it could be in the form of information technologies, what we traditionally know, SaaS company or something, but we focus on companies like IoT. We think in ag sector, it's all about getting data, using remote sensing to get data. At the same time, a lot about biotechnology, a lot of food sciences in terms of how you can extend the shelf life of food, perishable food, which is currently there today, how you bring the logistics ecosystem or get the cold chain. So technology is definitely being part of it, but it's not traditional IT, so you see a lot of mechanical engineers, electronics engineers playing that. And I think with this current boom, and it's going through a tough phase for traditional VCs, I think it's also a time where they're going to step back and look for de-risking the strategies in terms of trying to look at new sectors. So I think for traditional sectors or traditional startups, which has been focusing on like Me Too strategy, would slightly be a painful, but for people who want to do something different, I think might give more options than before.
Towards the end of 2016, the B2B space saw a lot of action. The ET award for the best startup went to Freshdesk. It was all about enterprise SaaS startups. Do you see that trend continuing in the 2017?
No, I think it's a little bit of media play, to be honest. I don't think it was an either or ever in our country. There is so much opportunity in both B2B as well as consumer. In fact, we picked up our first B2B payment company, FSS, way back in 2010, doing well. So the question really is, it's the noise and the sexiness of the sector of consumer which overshadowed B2B.
One of the reasons B2B investing has picked up, so your hypothesis that consumer was not hot, some of that's placed to sentiment. But if you look at fundamentals, what does B2B mean? We have invested in a company that started off with doing construction. How do I describe it? They for contractors, construction contractors, they would help them procure all their raw materials. So tiles, taps, all of that stuff, right? Until about 2 years ago, those suppliers were not on tech. They were not using mobile phones. So that is one big change that has happened. As the mobile technology is penetrating deeper, you can actually do things that earlier you would not be able to do.
We do look at young companies, especially in brands in say food, like you were saying. But more importantly, I think why there is a tech orientation is I think even traditional businesses are getting tech enabled today. So if you are looking at a health tech company or anything like whether you're looking at robotics in surgery, the tech element is creeping, and I think we are seeing the tech being the innovating factor, which then attracts us. So the reality of the world is that the world is going to be that way. It is going to be dominated by tech, and the good thing is tech has got democratized, right? If you look at the development tools of AWS, of Amazon and Google, etc., it is becoming easy to deploy technology to bring about change in traditional sector.
There are so many food delivery apps coming up. Okay, there's so many. There are 6 to 7 right now. Yet they keep receiving funding again and again, but they end up with the same business model, and we see them closing down in a year or two. So, what has been the reason behind? Do you find any specific? Do you look for any specific things in the model, and how does it go about?
This goes in the minds of anybody who's hungry, I think, these days in big cities. Every single time you see that, where do I order it from and what is different from one app to another? And we've read all about the kind of pain that food tech witnessed in the last especially in the last 12 months, if I may. Bala, sorry, I think I stopped you. Go ahead.
No, please go ahead. No, I would not answer that directly. I think if you see this phenomena is called the Uberization of everything, and including the garden gnome, as they call it. So there is definitely a phenomena that is happening. But the way I would answer it is that I think a lot of the businesses are becoming local heroes, right? So if you take Bombay, you would have a very strong dominance of say Uber, whereas in Hyderabad, Ola is supposed to be really reigning as a king. So there is a power of concentrated local businesses that are coming about, and if you are very strong in one local area, maybe you will get consolidated by somebody else. So there is also that strategy where pick your market, do it well, become the leader in it. So there is going to be such kind of opportunities that come about, especially because entry barriers, like I said earlier, thanks to technology, thanks to new markets opening up, have become far and far less. It's easier to start businesses today than ever before. So maybe that's a strategy that is going about. So just don't blame the VCs. It's also the market.
Starting from this entire unicorn phenomenon that seems to have gripped, thanks to us again, thanks to the media and the headlines and the newspapers and the television channels, that unicorns as a concept has been the headline story of the Indian startup ecosystem, especially over the last couple of years with the rise of the Flipkarts and Snapdeals of the world. And now, at the beginning of 2017, it looks like some of them are going to need to find a way out. Some of them, are staring at a down round of funding. So I want to understand. I'm going to start from here and then come to this side of the panel. How do you see this entire unicorn phenomenon and the need for balance in the Indian startup ecosystem, even as we get 2017 going?
Yeah, I guess the way I look at it is I think it's a little unfortunate, but it's a reality of these wild upswings and downswings that is going to become part of our valuation scenario in our country. The only thing that, in a real classical world, one would have said, okay, from Series A to Series D till exit, you would want to see a smooth upward curve. I think the kind of new markets that we're dealing with, both on the supply side of capital as well as on the demand side of capital, I think these swings are going to be inevitable. And having said that, I would just say that I think we should, if I were an entrepreneur, I would not want to have this upsurge very dramatically, because I think we go ahead of the market too much. But like I said, when you're getting it from VCs, why would you not take it? So somewhere I think rationality should prevail. It just helps the whole cause. It helps employee motivation. It helps entrepreneur motivation, etc., etc. So I would seek more rationality and smoothness of the curve.
And in that sense, I wanted to ask you, if some of these unicorns in the country do end up going for a down round of funding in 2017. All of them are especially consumer internet companies. How do you see that impacting the entire B2C space per se?
It won't. So I think again, it's the manic depressive. We are investors in two unicorns, Quicker and Ola. I think that when Jio launched, Airtel stock dropped 14% after their results. Nobody talked about it. It's normal. Price is what a willing buyer and a seller are willing to pay for each on a transaction, right? So if one of these companies goes bust, I think that's also healthy. So I think we are making too much of these things. The reality is things go up, things go down. I think it separates the wheat from the chaff. It separates the outstanding entrepreneurs from the ones who are also rants. And now, is there a sentiment impact? Obviously, there is a multiple global wars going on. We happen to find ourselves in two of them, between Quicker and OLX, Ola and Uber. There's Flipkart and Amazon. So I believe, not that I have any inside information, but I believe in the next 6 months, you're going to see all of these things landing, and they'll be landing smoothly, and the sentiment will turn very, very quickly.
How do you see exits panning out for the year 2017? Assuming that at least, some of them are going to, again, quoting Avnish's words, some of them are going to, and most of them are going to be finding it smooth. Where is the exit route?
Actually, I think the next couple of years is going to be about exits. I am truly excited about it. After a long time, I'm seeing that 2004 return back into this country. The reason I'm saying this is, if you look at the capital market, the amount of money that is sitting with domestic mutual funds is amazing. They are hungry for new stories. I mean, you've seen some of the IPOs that have happened. I agree that the time to IPO is still large, but yes, it is not a window that is shut. I mean, I think I do think the capital market has appetite for new paper quite a bit. But more than anything else, I see M&A and consolidation happening much more, because the prices are going to get more more rational. There's going to be far much more openness to acquire something. Two of our companies right now are talking to two domestic investors who have not come into this arena before. So truly excited, to be honest.
Tell me this, have the new norms which have made it easier to list a startup in the country, all the push from Startup India, Stand Up India, and for exit for investors, 5 to 7 days either, which were a rough time period for investors to exit. Has any of the policy push changed the dynamics in the startup ecosystem when it comes to listing themselves and dealing with the capital markets?
It's a great initiative, but I guess the bugbear of both either this large list of the BSE, NSE, and the startup exchange is one thing, that is, there is no liquidity post. The float that is available post listing still is very, very low. I sit on Naukri board, and I still sit on Naukri board, and I do see that even for
I lost count of the number of boards you sit on. I tried to know as much as I could.
Yeah, so I'm just helping you with that. So that's the only issue in our country. It is nothing else. I don't think. I think the initiatives are very, very welcome. I do think, but we lack the post-listing float and liquidity that is there. I think that continues to be an issue.
Avnish, you want to add something before we head to the audience on this?
The thing I would add is on the tech side. So I would say on the non-tech side, the exit market is very healthy. On the tech side, it's actually been pretty ugly over the last year, which has been largely consolidation. I was reading the other day, I think it was maybe venture intelligence data, which was 50 odd exits, but they were all small company M&A where largely investors would have lost money. So I would say the tech exit market, I'm optimistic more in the 3 to 5 year time frame. But it's not a rolling 3 to 5 year, because every time we sit on these panels, we say 3 to 5 years it'll look good. But this time it feels more real, largely because the markets are deepening.
When you look at a business plan, and when I present to you, is it necessary to have the financial plan where the company has to be profitable, though it may be scaling up significantly, and always justify that the scale may need to burn cash? So does the 5 year plan need to have a profit element built into it, or is it okay if I show you a plan which is continue to scale and not profitable? And in that case, do you have an obligation on the promoters to provide you an exit? Snapdeal and Ola have been recently talking about protection from foreign capital. Do you think it is really fair, because they have themselves been burning cash and fighting all the traditional companies?
Thank you. I wanted to touch upon capital dumping. That's been the buzzword, and again, I've had to be at the receiving end of so many people who refuse to agree with it.
Inherently, is a profitability built into the model, which means to say that you are selling 1 rupee, your gross margin is 20 paise, your net margin is 2 paise. I would worry about the leanness of the margins. Whereas if you were to say that I'm selling a rupee, my gross margin is 60 paise, EBITDA comes down to 20 paise, and I will have eventually have a net of 8. I'm not looking for profits in the first 5 years. I'm looking for a profitability model. Some businesses are endemically slender margin businesses, where you take retail, you take logistics, you take a lot of the distribution games. They are endemically, the inherent margins are much, much weaker. So in which case, you will make a lot of money as a business when you are large, or you have a very strong economic moat to defend those margins against any kind of onslaught.
On the capital dumping point, so first of all, Bhavesh himself has clarified that he was asking for a level playing field, not protectionism. I'll tell you where I'm torn. I don't have a clear answer. I have my own personal opinion, but I don't have a clear answer. So on the one hand, I'm a hardcore capitalist. I believe in absolutely free markets. I believe the best product should win. And whether that's Indian or foreign, it doesn't matter. There are two ways of doing things. One is a carrots approach, other is a stick approach. Protectionism is a stick approach, but they can be a carrot approach. And the carrot approach can be that Indian companies that have started businesses in India, they should have some kind of an incentive. So for example, in China, forget the barriers that the Chinese government erects to benefit local businesses. But they also have a China investment fund. The local fund invests only in local businesses. So it actually gives more incentives to local businesses. It could be that for government contracts, which happens worldwide, transportation, airline, a lot of these sectors are considered strategic in nature. And they get incentives from the local government. So that's the approach I think resonates more for me.
I want to wrap this up by asking one question to the entire panel. One short answer from all of you. One thing that you personally would love to see in the year 2017, as an investor, as a startup, as somebody who's part of non-tech startup ecosystem, individually, your personal wish for the year 2017, the one thing that you would like to see in India's startup ecosystem. Bala, if you want to start this off, ladies first.
I actually just would like to see the ease of doing business really happen in our country. I just cannot tell you how much I'm waiting for it. I thought with the Modi government coming in, it would start. It has started, but it's still not the same, right? I don't know what else to say.
So that's
I just
both
hope
of
it's
us.
magical.
I've also got answered. Okay, that's the first thing which came to my head when you asked that question. So we've
All
covered.
right.
Both of us are covered.
Yeah.
Okay, both
I'm
of
not
us.
answering.
Before I move forward, anybody just wants to latch onto that bandwagon and say that's the same thing that I would...
bandwagon. It's a very good one.
Manav?
Yeah, I think it's adding on from what you're saying. There has been a lot of movement, but when we see documents, it's hard for an entrepreneur who's especially not whose first language is not English to understand verbose documents, which investors are used to, sophisticated documents. Exactly. So I think I think we all need to collectively also make an effort to simplify the whole transaction process. Whether it is how it is done, the way it is done, how documents are written. I don't think any of us need to be scared that we're going to lose our jobs as a result of it. But I think it's important that everybody is clear and everybody is not a lot of time is spent on trying to understand what you're signing up to.
So we don't need an interpreter for the legalese being the point.
No. I disagree with Bala on what he wants to see as change this year because he's lying. If that ease of doing business changes, he's out of a job. Yeah, he's out of a job. And therefore, he doesn't want ease of doing business in India to come. I guarantee you that.
No, you don't.
Jinesh, what's your one wish for the year 2017?
I think 2017, I think it should be a stable year, which I think hopefully both entrepreneurs and investors should step back and realize
But one single wish, if I were to ask you something specific that you would like to see.
getting the fundamentals right.
Startups getting their fundamentals right.
Absolutely, yeah.
Avnish would agree with that.
I do, and I guess I'm looking forward to the return to the normal. But if they were, first of all, again, macro precedes everything, so I would love to see that happen. At the micro level, for what we do, I would love to see data and mobile explosion happen. India is way behind in broadband penetration, explosion, still a struggle to get 30, 40 megabits of speed when world is talking about 1 gigabit. So I would love to see that happen.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.